Welcome, ladies and gentlemen, to Commodity TV, and we have another edition, a new edition of our online interview series here today with Revival Gold. And Hugh Agro, the CEO, wants to give us an update and insight into his company and a company presentation. Hugh, good morning. How are you in Toronto?
Hello, Jochen. Great to be back.
Super. Yeah, great to see you in good shape and smiling. This is how we like it. And I can really understand that you're smiling because you guys did a great job with, I would say, this year, but also the years before. But this year, exceptionally, you brought out a PEA and lots of good news of drilling, and still a lot of drilling is pending. And I would suggest we move directly into the presentation, and you got to show us what's going on.
Super. Well, great to be here with you. This is a wonderful view over the project at Beartrack-Arnett. We're in Idaho in the United States. Cautionary statement. Just a quick summary on the company, Jochen, for your viewers. Of course, we're advancing Beartrack-Arnett. It's the largest past-producing gold mine in the state of Idaho. We're 3 million ounces, up from nil when you and I got started on this story in 2017. And we've just hit this big milestone of putting out a PEA on the first phase of production from the project. We've got a lot of analyst coverage, and you can see on the right-hand side of this slide some of the gold that was previously produced at the Beartrack project. I know your viewers are focused on good metal in good jurisdictions, and we're that in spades.
Absolutely, and we want to see this in the future from you also, those nice bars, but with the with your name on it, right?
That's right. Those are pure gold bars, by the way, Jochen. There is no silver or other byproduct metals in this project. It's pure gold, so 100% exposure to the metal. Look, just a quick summary on the asset. We're 5,400 hectare land position that we put together over this past 3-4 years. We're at 3 million ounces. We've got mineralization across 5 kilometers of trend, and we've got another 10 kilometers of favorable exploration to pursue going forward. So this is just the start. We've got this preliminary economic assessment, but it's just the start of the project. 72,000 ounces a year from this first phase project at an all-in sustaining cost of just over $1,000 an ounce. Now, people have asked me about Idaho, and as you know, it's one of the great jurisdictions in the world. Top 10 in terms of the Fraser Institute's ranking. We've got a supportive state government. We're in a community that understands the benefits, the social and economic benefits that come from responsible mining. Finally, just to the valuation side of the equation, look, we're trading at $12 an ounce in the ground in good geography relative to our peers at 3-4 times that level. 61 million market cap, 12 million of cash, so we're funded for this year, funded for next year, and as we've been talking about, this PEA is just the start of the project. I'll dive into a few of the details here. I won't go into all of this. Of course, it's all available on our website, and your viewers, of course, I know they're in touch with you also, Jochen, for additional information. But this is a view over the project, and it's a huge advantage for us that we've got all of this infrastructure, power, roads, an ADR facility, and so that's made for a very low capital restart for this project. $100 million of capital on this brownfield site, and the deposit is open in all directions for expansion. We're only using about 1/3 of the resource for this first phase of the project. Here are the economics on this slide, Jochen. At $1,550 gold, we've got an NPV after tax of $88 million, 25% IRR after tax. And of course, we've got a lot of exposure to the upside here. At closer to spot prices, we're about $200 million of NPV and about 40% IRR. So the project's got a lot of merit, and it's got a lot of upside to the metal price.
I have a question. The life of mine is 7 years, which is, I would say, okay. But if I look at your 5-kilometer trend plus a 10-kilometer trend, so and also I know you have drilled, I think, 30 holes and only 12 released, which were probably not fitted into this PEA calculation already. So my feeling is that with, let's say, with the feasibility study, wouldn't you have the chance to really increase this life of mine a lot?
You know, we were asked, why pursue the PEA now? You've got all this drilling that you're doing this year. Why don't you do a resource update and do the PEA later? And here's what we, said to our investors and the analysts. We said, look, you can go and add those ounces and that potential to this project. What we wanted to demonstrate to you is that this is a low capital project and one that can be brought back into production on a relatively short time frame. So you're absolutely right. We've got much more mine life to this project than this initial 7 years, but it's what gets us started. And if I can bring you to this next slide, you know, the capital intensity of the project shown here on the figure on the left is very competitive relative to our peers. Even though we're only producing for 7 years of mine life, we're at about $200 an ounce of capital compared to our peers. And so that will come down as we add mine life, and we're very competitive as it stands. We're also competitive on the all-in sustaining cost per ounce. Look at us relative to the U.S. heap leach gold producers that are in the market right now. We're at the bottom end of that curve. And so this project has a lot of merit, and we wanted to get that economics out into the market. And we'll continue to add to the resource. As you say, it's got a lot of potential for more expansion, more mine life. Moving to the next slide, and just on that, this furtherance of this point about exploration potential and scale. As you know, Beartrack-Arnett is one of the largest gold projects, undeveloped open pit gold projects in the United States and Canada. And it's in the top 5 in terms of grade. So this graph here on the left will show you where we stand in the marketplace of opportunities. There are 6 dozen gold producers in the world, small and large, looking for growth in good geography. And we're one of those projects that they've got their eyes on. And beyond this first phase heap leach project, we've got a lot of potential to exploit through the mill project, a much bigger resource. And that's pictured on the right here. This very pretty Idaho gold coin divvies up as to about 1/3 of the resource ounce in the heap leach restart project, but we've got so much more potential beyond that. Some of the project details, again, I'd encourage viewers to come to our website and learn more about the projects, but it's a relatively straightforward operation. And we know that the material will respond well to mining, and we understand the site very well because, first of all, it's a brownfield site. So it's already operated at the scale that we're contemplating for this restart, and in the exact same way, 2-stage crush heap leach operation. The other thing is, we've got the former general manager from the operation when it was in play back in the 90s on our team. And he's got a lot of vigor, a lot of experience with the project. And so that really lowers our execution risk. It lowers our technical risk for this project.
Question. I just saw 60%, if you go one back, 60% gold recovery. That looks to me a little bit on the lower side, I would call it. Probably this is just in the beginning, and maybe with a feasibility study you will optimize this also. But is that maybe one of the reasons why you have $1,057 AISC? Because I thought that you're maybe well below $1,000.
You'll recall that our heap leach resource has an average grade of about 0.55 grams per ton. In the oxide material. And we've got excellent recoveries in that material, close to 90% in the oxide material. But the overall plan for the restart of Beartrack-Arnett is to put some in transition and sulfide material on the leach pads as well. And they have a lower recovery rate. So the overall recovery rate is about 60%, but our grade is higher. It's at 8.87 grams per ton. So we've got higher grade, slightly lower recovery. At the end of the day, it's all about economics, though, as you know, Hilken. So the engineers have gone into this project and they've said, how do we maximize NPV? And by the way, this is a great segue to talk about our engineering team. We had Wood PLC on the project. We brought in KC Harvey on the environmental, RPA on the resource, and PwC on the tax and the financial model. So we've got a class 1 team of engineers and consultants. And as you know, not all numbers put out by explorer developers are the same. I would say to you, this is a bulletproof PEA, and it was been done by a first-class team. Here's the capital cost assumptions going forward for this project. Again, speaking to the quality of the team here, we've got a contingency in this $100 million capital of $20 million, owner's costs and indirects of another $18 million. So there's a lot of padding on this that the engineers have appropriately included in that $100 million of initial capital. And the point of all this is to say we've got a solid number, we've got a solid NPV on this project based on a reasonable estimate on capital with lots of contingency around it. Here's the site layout. This graph, this photo is this figure is a little bit difficult for people to read. Again, I encourage you to come to our website, look at some of the media on our website. But it's a very compact site, and the pits and the heap leach pads have all been constrained in the Beartrack area, and that's important because that reduces our permitting timelines. We will have to do a longer permitting time frame for the satellite Haidee pit, but that's at the back end of the mine life. And so what we're going to enjoy here is the possibility to bring this into production on a more expedited basis than we might otherwise see. We've talked about infrastructure. This is a beautiful photo of the site at Beartrack-Arnett. Of course, we've got lots of snow on the ground right now, but you can see from this site photo that we've got power, we've got the gold production facility, we've got the leach solution ponds, all of these things available for us to redeploy. It'll reduce our permitting timelines, it will reduce our capital costs, and ultimately it reduces the risk of executing this project. It's a big concern for investors. This is for us a definite advantage and for our investors.
But what is the point with water? Because I saw that lake here in the background, and I mean grid power, this is outstanding because it saves so much money. And of course you have the road access, you have that all, yeah. But also when you are doing heap leaching, you need a lot of water, and you need to treat the water and to make sure that nothing is really polluting into the environment. So how is that solved?
Yeah, you're absolutely right. We use water in the heap leach process, and then we treat the water for discharge. And the great thing about Beartrack-Arnett is we've got this wonderful award-winning track record in ESG. And this is increasingly important for investors. For those of us in the mining industry, it's part of our DNA to do things right. And at Beartrack-Arnett, we've got a very high bar standard of performance. And as I said, an award-winning site for ESG. And what I can tell you about this site and the people who work there is that they also live in the community, and they also are part of the outdoor recreational interests in the area, and they want to do right by all of those things in our project. We take ESG, the environment, the social side of this project very seriously. Here's our team. I spoke about one of the gentlemen on this page. I won't go into all the bios. Again, come to our website and see more about our team. But this is a team that has had a tremendous amount of success in the gold mining business, both in terms of capital markets and in terms of operations, including some of the best permitting and government relations people in the industry in the United States. I often get asked about exploration. We've got 3 drill rigs turning right now. We're drilling in 4 locations this year, and we have results coming out. We've had 12 drill results out already, but we've got another couple of dozen holes that we'll put out over the next couple months. There is a real slowdown in the assay labs because of because of the circumstances of the industry right now, with lots of people very busy. But this project's got a lot of potential beyond the footprint of the existing resource shown here in gold on the page. The brown areas of shading are the areas that we're particularly interested in. And just to put this into scale, that's about 10 kilometers of favorable structure that we have yet to explore, and we'll continue to pursue that as we move forward with the project.
And I see also here 5 to 6 kilometers of unexplored potential, like where on Rapid, where number 4 is. I mean, this is just once again the size you've worked on already, right?
Look, again, we've been on this project for only 3 years. We've just scratched the surface. We're now permitted in the Rabbit area to continue to grow our drilling activities out there. We put 3 holes in the Rabbit area this year, but we've got a lot more work to do out there, and we're permitted to be drilling there. That's something that we'll follow up for sure next year. So lots of drill targets ahead.
Super.
Again, it's very difficult to read this slide in any detail, but what I want to show you here in this long section of the Beartrack Trend is that we've got mineralization over 5 kilometers, and we've got grades of 1 to 2.5 grams per ton over intercept widths of 15 to 115 meters. The details are in the slides and in our technical report, and I urge viewers to have a look at some of that in more detail. But the scale of this deposit makes us very excited about the potential for further growth in the resource. You don't find deposits like this that stop at 3 million ounces. We think this has got potential for 4 or 5 million ounces or more. And we've also got grade. And this is something that we're becoming increasingly more interested in. We've got grade potential in this deposit. We will pursue that with deeper drilling. As we get into the narrower parts of the deposit, we get a intensification of the mineralization. And of course, the potential is quite interesting here. 71 grams over 10 meters in the Wards Gulch area. We'll certainly want to be following that up in earnest. The evolution of the Beartrack gold deposit is just outstanding. Here we've got the block model shown in its evolution from 1996 to 2020. That block model is shown in red, and you can see that as we move down the page and as we move forward with this project, it's just continued to grow. And it's limited only by the drilling to date. Jochen, we've hit in every drill hole we've drilled, but for one on the Beartrack-Arnett project to date. Now, look, we'll be taking more exploration risk as we move forward, but that's a pretty stellar track record. And it shows in terms of our discovery cost. So over the last 3 years, we've found 3 million ounces of gold, and we've put it onto our resource statement at a discovery cost of less than $5 US an ounce.
Oh, that's super. Fantastic.
So the point of this is that the team is working efficiently. We've got a very permissive gold deposit, and it's going to continue to grow beyond the first phase project that we've already put economics to with this recent PEA. The drilling underway, I mentioned, we've already put out 12 holes to date. They've hit in each hole. This is the drilling that we've been doing in the Haiti area, which is a satellite ore body to the main deposit. If you look down in the index map on the bottom left here, I'm pointing to where that's located. And we are doing infill drilling, and we're doing resource expansion drilling at Haiti. We've got another 12.5 holes to come out of this drilling program from Haiti this year.
When will they come out, do you think?
Well, I expect we'll have some of these holes out by early December, and the balance in January. The area that we're in now drilling is on the Beartrack deposit, and we're drilling at 3 areas on the Beartrack project side. And that's over here on the eastern side of the project, southeastern side of the project. And we're drilling in an area that's 1.5 to 3 kilometers south of the footprint of the existing resource. We're also drilling up here in the Joss area, and we've got some drill holes between the north and south pit in the main deposit area. So you've circled the areas there in black, Jochen. Lots of potential to expand this deposit. We're just scratching the surface this year. We've got about 10 holes in the Beartrack part of the project, and we'll have the results out from those holes December, January, might take us out to February, but we'll have the results out as soon as we have them in from the lab. In total, we're going to do 40 drill holes this year and have all those results out, and we'll be back in again next year. Of course, we're fully funded for next year's exploration program as well. Here's our capital structure. Market cap now about $60 million Canadian, only 71 million shares outstanding, and the street research on Revival Gold would put us at 2 to 3 times where our current share price sits in terms of average target price.
Just my question: what is the average target price? Must be around $2 or $2.50, right?
Yeah, close to $2. We've got a range of targets from about $1.50 to $2.45, and we've got some great analysts on the stock. Again, I'd encourage viewers to look at some of that research, including some of the more recent research pieces that have come out, which include taking into account the PEA. We're about 40% institutionally held by some very good names in the gold business, and the retail float is only about 22% of the stock right now. Management owns 10%, and I can tell you I was in the market buying last week when we came out of blackout myself. I continue to believe that there's excellent value in the stock, and I account for about 5% of that 10% management ownership myself. We don't just walk the walk, we talk the talk, we walk the walk here. We're owners as well as managers.
Yeah, I mean, you're sitting in the same boat like all shareholders, right?
Exactly. Here's the path forward from here. Over the past 8 to 12 months, we've done an equity raise. We've put out this PEA result. We've been drilling. We'll do more drilling next year. We've got environmental planning and permit planning work underway already. In 2022, we want to be doing an updated resource and a PFS on that first phase of the project. By the end of 2022, we'd like to make a construction decision on the first phase project. In the meantime, we are also looking at the mill project. That's the second phase project. And recall that at the contemplated 20,000 tons a day that our consultants, our resource consultants used in the resource estimate, we would be producing about 300,000 ounces a year of gold. So that second phase is a very exciting prize for our investors, and we'll continue to pursue that, while at the same time advancing the more immediate and less risky first phase mill heap leach project.
If we talk about that first phase project, because I think this is the major key to de-risk, let's say, the whole company. Yeah, I mean, this phase tooling project would probably cost a lot more than the phase one, of course. But the point to me is, when you have the phase one project, you already make a lot of money. So that means that you can finance phase two out of that.
Yeah, we were talking about that earlier, Jochen, and I completely agree. Having these two projects gives us optionality, and any gold price environment, we can deliver for our investors. Yep. And as a management team, we like the idea that we can, in effect, move the project forward without having to do excessive dilution. And the market will embrace that. There are a lot of folks willing to finance a project that can go into production in this gold cycle.
That's right. So this timeline here, that means by 2022, you do the decision for phase one, of course, right? And then you could be like 2023 in production with phase one?
It'll probably take us about a year to get the project constructed and up in operation. So conceptually, we could be in production in 2024, yes.
As you said, this is a brownfield project, of course, and we saw it, of course, already on your beautiful photos. What is about the permitting process? Have you inherited already permits, and maybe how does it work, and what is the timeline for the permits? Is this like a straightforward path?
Yeah, there's two basic permitting processes for something like this. The one is an EA process. The other is an EIS process. And we think that because we're confining ourselves within the brownfields site location for this first phase at the Beartrack site, that we'll be able to pursue an EA approach as opposed to an EIS approach. And that's important because it's a less time-consuming process. But remember, we've got a lot of baseline environmental data. We've already got a cyanidation permit. We've got the track record of the past operation. So there's a lot of understanding, and there's a lot of already expertise with respect to this project. And that will shorten time frames for permitting. But in a nutshell, what we can say here is that the project is got a lot of attributes, a lot of baseline data, a lot of existing disturbance and infrastructure that we can take advantage of, which will lower permitting timelines and take us into an EA process as opposed to a more cumbersome EIS process. Now, longer term for the mill project, we will most definitely be in an EIS project. And what we've done with this first phase is buy ourselves time and cash generating ability to take us through those steps. Moving forward to relative value, I do believe we trade at excellent value. You can see in this chart the bubble for Revival Gold shown here. Our grade at just over a gram per ton in the total resource stands up very favorably relative to our peers, and yet on an EV to ounce basis, we are trading quite low. And I think our bubble size will increase as we continue to explore, and I think our bubble valuation will increase as we get the story out on the PEA, as we do our drilling and show results from this year's program. And as you pointed out, Jochen, none of the results from our existing drill program are reflected in the PEA. We won't do an updated resource until early 2022 because we've got another drill season ahead of us that's fully funded and ready to go. But I can tell you we'll be putting out results, and the analysts and the market will see that we have potential to expand this project. Just being open in all directions gives us lots of target areas. So we've talked about a lot of details around the project and the company, but this is it in a nutshell. We've got a compelling opportunity at Revival Gold, a veteran gold team that's done it before, a fully funded exploration program, and we've got strong PEA economics for an underlying first phase gold project. Beyond that, the exploration on this deposit is outstanding. We see a potential for better than 5 million ounces, and we're going to continue to explore. It's a brownfield site with a significant head start in terms of infrastructure and the welcoming of the Idaho state government for responsible mining. These are important things in today's day. We've got low technical and execution risk because of the existing management and the fact that we've got the experience of the prior operation. Finally, I'd say in this gold price environment, although we're seeing a bit of weakness here in the month of November, December, the outlook for 2021 is outstanding. And we've got great valuation here at $12 an ounce in the ground.
Yeah, and definitely governments are printing money like there's no tomorrow, right? And so the gold price will rise definitely for sure. It's
a good place to be, Jochen. Thank you for having us.
Super, thank you very much. And there was a great presentation here from Revival Gold. So I'm coming back to this here. Thanks you, that was fantastic. And really, I must say the company looks outstanding. You guys have done an outstanding job. I really look forward to those next 18 holes. And if I got you right, you are drilling really 40 holes next year again, in addition, right? So maybe one last question. You have over $12 million in the bank. So those $12 million will bring you through 2021, right?
That's right. We're funded for our exploration for next year, and we'll decide exactly how we're going to explore based on the results from this year. We'll do that sometime in the March timeframe. But I would expect a similar sort of program: 2 to 3 drill rigs, 5 to 10,000 meters of drilling.
Super, perfect. Then I wish you absolutely the very best. We look forward to a lot of good results, I would say. And I have a very good feeling that we talk latest end of January, beginning of February again, when we have seen your results from the 18 holes.
Thank you, Jochen.
Super. Thank you very much. And of course, already Merry Christmas.
Merry Christmas to you too.
Thank you. Yeah, ladies and gentlemen, that was Hugh Agro, the CEO of Revival Gold, and you heard it. The company is in fantastic shape. They have a two-phased model, I would call it, a lot of optionality, fast track on production. This is really important. And great shareholders, over $12 million in the bank, fully funded for next year. 18 holes are still have to be reported. 40 holes they want to drill next year. And as said, the PEA showed already fantastic numbers here. And yeah, we look forward to keep you posted. Check out the company. Thanks for watching us, and bye-bye from Switzerland.